What's up guys, Q here from Hyperstocks. Today we're going to be talking about candlestick charts, which are the most popular by far trading charts out there available to any trader. Most professional traders will use candlestick charts or bar charts. They're very similar, but candlestick charts are just more popular because they will give you the color as well. So it's easy and appealing to the eye. At first, candlestick charts can be a little overwhelming, but once you get the hang of it, you'll realize that candlestick charts are the essence of your success to trading because they will give you real-time price action movement. And price action is the best way to trade because you're literally seeing what's going on in the stock within a specified time frame that you set on your broker platform. Now, candlestick charts are actually introduced or were introduced by a Japanese rice trader. I can't really say his name, so I'm not going to butcher it. So he actually introduced this in the 18th century, just to give you a little bit of background on them. And they're still being used to this day on professional platforms. So I'm not going to waste too much of your time. We're going to go ahead and jump right into the charts. Just a heads up, I'm not going to give any real life examples today. I'm just going to go over the basics of candles. That way you guys understand what opening price is, closing price is, what do the wicks represent, and finally some popular candles or infamous candles as I like to call them. So let's go ahead and start with breaking down what a bullish candle is. So a bullish candle just pretty much means that the stock opened below the closing price. So when you're looking at this candle that I've drawn out for you, all it means is that the stock opened up at this specific point right over here and it closed at this top point. So if the bottom point was $50, the top point can be $51 or $52. There's no more to it. Now, bullish on the stock market means that the sentiment is favoring an upward move. So if you're bullish on a stock, that means you expect it to go up. So obviously a bullish candle means that it opened and closed at a higher price than it had opened at originally. And we'll go through different time frames for you as soon as we get to the next few slides. That way you understand what a bullish 5-minute candle looks like versus what a bullish 1-minute candle looks like. Now, bearish is the exact reversal. So it's vice versa of what we just talked about. Bearish on the stock market means that the sentiment is favoring a downward move, meaning that the opening price of the candle, for example, here, let's say this was $55, it was more than the closing price of the candle. So if this represents 1 minute of movement and the stock opened at 55 and it closed below at 50, then you will see a red candle on your trading platform representing a bearish move. Obviously, red means negative and green means positive. I guess that's just an unspoken rule in the world. Now, in terms of candle wicks or shadows, so what do candle wicks and shadows represent? So all it means is it's the trace of where the price was during that candle stick. So if your real body, so this green part of your candle is the real body of the candle. So the stock opened and closed at that point. The red candle, the stock opened higher and closed lower. The wicks on the top and the bottom represent the time or the price point that the stock reached before closing back on the real body close. So say this bottom part is $50 and say this top part is $51. This wick may represent $51.50, but the stock never actually closed at that price and got pushed back to close at this point before the time period ended for that candle. Same exact thing with the bearish candle. If the stock pushed below that $50 price and went down to $49.50 but pushed back up to close at 50, that means within that time frame that you have that candle set to, the stock reached and dipped below the closing but managed to get pushed back up to close at this specific point of the real body. So it does not represent where the stock had closed, it represents where the stock had been through that time period. Now, I'm mentioning time frames and time periods a lot. I'm going to go ahead and break down what I mean, and I think this is probably the simplest way I can put it for you guys. So time frames just means how much time does each candle represent. Every candle represents a specified time frame that you set using your trading platform. So on the top left or right, or if you right click on your platform, you may see a place where you can change your candlesticks from 1 minute, 5 minute, 15 minute, 30 minute, even 1 day and 1 week. All that means is if you switch that to 5 minutes, that means you're seeing a combination of 1 minute candles within a 5 minute candle. And I want you guys to think of time frames in the following two terms, and that's macro and micro. Now, this isn't a verified source. This is something that I call macro and micro because that's the way I think of my charts. I always want to look at the bigger picture, hence the word macro, and I always want to look at the smaller picture, hence the word micro. So if I want to see what the stock is doing overall, I would obviously want to zoom out to maybe 30-minute candles or 1 hour candles, or I would want to zoom out to 1 day candles to see an overall picture, because now I could see a more fluid movement rather than a more detailed movement. Now, if you want to go into detail and you want to see what the stock is doing, then you may want to look at the micro candles. So for example, if I am looking at a stock and I have a price target of $50 for it, and it's currently at $30, that had ran up from $10 in a matter of a week, maybe you want to look at the micro and macro picture because you want to see which level is it overbought at, because obviously a stock that ran from 10 to 30 in 1 week is going to be overbought on some time frame, and you want to specify that time frame and wait for a pullback on that specific time frame. You don't want to be looking at 1 minute candles anticipating a pullback on 1 day candles or 1 day time frames. Now let me go ahead and break down what I meant by when I say every 5-minute candle is made up of 5 1-minute candles and so on and so forth. So if we're looking at this stock and we are looking at the 5-minute candle, all it means is the stock opened up at this specific bottom. Because it's a green candle, that means the opening price was at the bottom and the closing price was at the top. If we break this 5-minute candle down to 1-minute candles, this is how it's going to look, and that's all that your broker is doing for you when you switch back and forth between time frames. So the stock had went down below its opening price and made this wick at the bottom. And the reason why this wick happened is because when the stock opened up on the 1-minute candles, it opened at the opening price of the 5-minute candle, but it dipped below. Now the 1-minute candle will show red, it will close below, but on the 5-minute candle, it will only show a wick. Reason being is because on the last minute, the stock didn't close down here. If the stock had closed down here on the last minute of the 5-minute candle, that means that this part would have been down here and this would be a red candle. But instead, the stock pushed up and it kept going to the point where it went above the closing price of the 5-minute candle. So remember, this 5-minute candle happened after these 5 minutes were formed. So during the 5 minutes, the stock had dipped below the opening price, which was right over here. This was the opening price. It dipped below and it left this wick because it went to the top and it managed to push above this point and left another wick at the top of this candle, which is part of the 5 minutes that we're breaking down here. But the stock did not close up here. Notice how it's a red candle. That means it reached all the way to this point, but it went down to close at this specific point. And on the last candle of the 5 minutes, the stock managed to push and close right over here, right around the same, well, right at the 5-minute closing price, because this was the last minute candle. So you see how simple that is? If you break down five 1-minute candles into one single 5-minute candle, all you see is a storyline of what happened within that 5 minutes. Same exact thing goes for 15-minute candles. You could draw 15 1-minute candles and they will tell you a story of what that 15 minutes did. And that's all you're really looking at. You're looking for stories. What are these candles telling us? How can we decide what direction a stock is going to go next based on the candles that we're seeing? And some things may help you out, like the following slide that we're about to explain, and that is going to be infamous candles. So let's go ahead and break down some infamous candlesticks. First, we're going to start with the hammer, and the hammer is a sign of a reversal candle. So this appears when the stock is in a downtrend typically, and it's going to start bouncing to the uptrend. Now, if you see the hammer on a 1-minute time frame, that means you're looking at 1 minute of movement. So it's going to be less significant for the overall move of the stock. So if you are day trading, of course you want to be looking at 1 and 5 minute candles. Those are going to be your best friends because now you're looking at trading a stock on the short term period. So one golden rule that you can stick by is stick to the time frames that you want to trade the stock at. So if you're a position trader that likes to buy stocks for 2 to 3 months, then you need to only be looking at possibly 1 hour candles and 1 day candles because you are a long-term holder. But if you are day trading and you're only going to be holding the stock for 5 minutes or 15 minutes, the right candle to pay attention to would be the 1 or 5 minute candle. So these candles, the candles I'm about to explain can come up on any time frame, but just relate it to the time frame of the significance that you're looking at. So if you're looking at this specific period, then relate it to that specific period as well. With that being said, there's a quote called hammer it back up. So if the stock is coming down and then you see this specific pattern coming up, that means the stock has a lot of push from the bottom. This long wick means that the stock dipped all the way to this point, but the longer the wick at the bottom, the stronger the move to the top because bulls were able to take it from this bottom point where the stock wanted to go and were able to push it all the way back up to close above that opening price. And this could mean that there's a reversal coming. Now, one golden rule about candles in general is that 2 candles will tell you a better story than 1. So if you see a hammer candle, it's not definitive that the stock is just going to reverse from that point. There's likely going to be another candle that can confirm that move. So if you see a hammer candle and the next candle is very green and strong and you see a spike in green volume, now we're talking about a more definitive sign that a reversal is on the way. Now, in terms of an inverted hammer, it's the same exact idea, but you typically see this one at the top of candlestick charts. So if the stock is moving up and it's making all these candles, and then you see a long wick at the top, and the stock also has this red body, or it could be green body, all this matters is this long wick, then we're expecting a reversal to the other side, but a second candle would give you a stronger confirmation. So you always want to use the next candle as confirmation. Now, when we're talking about a hanging man, it's very similar. You see how it's called a hammer, and then we're moving on to hanging man. So all a hanging man does is, the difference is really that the hanging man comes at the top. So the hammer candle, typically you'll see at the bottom. So if the stock is coming down, it's going to reverse to the upside. The hanging man means that the stock is going upward and is going to reverse to the downside. Same exact idea. Use this next candle as confirmation. And then we're going to go to bullish engulfing. Personally, one of my favorite things to see, because bullish engulfing means typically a very strong momentum of what's about to happen next, depending on the kind of engulfing it is. So all a bullish engulfing is if you see a candle and the very next candle overtakes the body of this candle. Works for 1 minute charts, works for 5 minute charts, works for 1 day charts. Obviously, the 1 day charts are going to be the most significant. So if a stock like Tesla, for example, is falling from $900 to $800, and then at $800 for the day, you see a bullish engulfing, that means now the stock has a good momentum to go back up. There's a clear sign that some kind of reversal is coming. So the candle must overtake the size of the previous candle. Bearish engulfing, same exact idea. The candle overtakes the previous candle and it pushes it in the other direction. And then finally, you have indecisive candles, or what we can call as harami or doji candles. These are very neutral candles. They will give you the beginning of the story, but they won't finish it for you. But when you see a bunch of these candles, say the stock is going in an upward direction, and you see 4 or 5 of these candles just moving in a sideways manner, then you should take note of it, because the stock may very much be on the verge of a reversal or another breakout, depending on the next candles that you see. But when you see candles like this start being developed, start thinking about taking profits or maybe raising your stop loss. So with that being said, guys, we didn't really cover way too much, but I just gave you guys the basics of candlestick charts. If you guys want to learn more, you can always join my full course. I'm not selling you anything. There's no rush at all. If you're not already in the chat, we'd love to see you in there. You can join via our Instagram, or I'll use a link, or I'll leave a link at the bottom. If you're not already subscribed to the channel, go ahead and subscribe. Again, my name is Q from Hyperstocks. Anybody from the Hyperstocks community, thank you so much for watching, and thank you so much for being a part of us. We always appreciate you. Have a great day.